to the scene. It's your host TTP. We're flying high in the crypto sky, just you and me. From Bitcoin rush to Ethereum, we trading all the coins. With the Trading Parrot, be making that joyful noise. We got bots, we got plots, charts on the big screen. 3 comments to Wick, Hunter with a trading machine. Laughing all the way to the bank, it's a fun parade. With every trade we made, watch how we get paid. TTP's got the formula, flipping coins like a spatula. In the crypto game, with the vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the Trading Parrot, we'll teach you how to fight. Dive into the charts, the RSI, liquidity at a glance, trends on the rise. We never leave it up to chance. All Trading tools of the champion breed. With AI and math, we're planting the money seed. Laugh with us, trade with us, ain't no looking back. You're with the parrot now, leading the pack. Alpha profits, snap plus with the crypto law. TTP's on the mic and he's ready to soar. TTP's on the mic and he's ready to soar. TTP's got the formula, flipping coins like a spatula. In the crypto game with the vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the Trading Parrot, we'll teach you how to fight. Dive into the charts.
Hello guys, welcome to the Trading Parrot. Today I have a special guest. I have Matt. How are you doing?
I'm very well, thank you. Thanks for having me back. It's always a pleasure to come and join you and chat about all things charts, data, Bitcoin, crypto, and anything else you fancy. So yeah, as always, it's a pleasure to be here.
It's amazing. Matt is going to talk to us not just about the technicals of Bitcoin. He's also going to cover a good spread of different domains, including on-chain, macro, liquidity, everything. And I know that he's got some ideas, some levels that he's looking for confirmation to see whether we are turning bearish. Last time I spoke with you, Matt, you were very bullish. I know you were expecting big things, but now it feels more like a turning point. Maybe potentially there are some levels of do or break that we are going to cover in today's video. I'm very interested to see. And if you guys are already tuning in, make sure that you're loud, you write down comments in there. We're going to answer some questions. You can write down your questions for Matt. He's an expert. You can have a look at the website that he's working with, the Bitcoin Magazine Pro. We're going to leave a link down in the description. There's so many charts for free that you can access there. So make sure that you give some love to the website, join for free, and access all those charts, which we are going to show today in the live stream. Matt, what will be the most important chart that we should start today as we are approaching mid-November, which should be Moonbember? We're seeing a little bit of a move to the upside, maybe potentially a breakout, which I mentioned in this morning's video, but I'm keen to see your opinion on where we are.
Great question. And it's a pretty pivotal point in the market right now, I think. So the first chart, very simple chart, but one everyone's kind of discussing is where is Bitcoin? Is the 4-year cycle over? Are we going to see a lengthening cycle? And it's the question on everyone's lips. It's the $1 million question. And of course, I don't have a crystal ball. I can't tell you exactly what's going to come next, but looking at the growth since cycle lows chart, we can see that this current Bitcoin cycle has now surpassed the length of the previous 2 Bitcoin bull markets, which obviously is leading many people to think, have we already topped? Are we now in bear cycle territory? Are we going to see a lengthening cycle into 2026? Or potentially beyond. So hopefully we can shed some light on that, potentially provide some charts for some simplicity and clarification. Because as you said, I think now is a very critical point in the Bitcoin price action. As we film this, the Bitcoin 6-month volatility is the lowest it has ever been. We're in a period of extreme contraction, just primed for a period of extreme expansion. So we need to try and gauge what direction that may be, how we can kind of plan. And like you said, identify some levels at which point we need to maybe start leaning bullish, or maybe at what point we need to maybe think that maybe we are in bear market territory.
So in terms of liquidity, do you think the injections, the catalysts are actually going to play a big role in the whatever we have left of 2025, or are you looking more into Q1, Q2 in 2026 for that bullishness? I'm also Very interested. Sorry, too many questions at the same time I have for you, but I'm really curious about the invalidation point, because you are bullish, but what breaks your thesis that we can really extend this bull cycle?
So I think the invalidation point of the bull cycle, it's an evolving, dynamically adjusting level. But I think just from a psychological perspective, as well as a technical standpoint, breaking substantially, convincingly beneath $100,000 for a sustained period of time would be a pretty poor look on a macro factor. Beneath the 50-week moving average, beneath the 365-day or 1-year moving average. And at that point, a vast majority of all market participants would actually be at a little bit of a loss when looking at the capital inflows. Over 50% of every dollar invested into Bitcoin throughout its history has come above $100,000. So it's a pretty key psychological level, key technical level that the bulls really need to defend. So beneath that, as I said, things start to get a little bit shaky. And above that, I think if we can reclaim the short-term holder realized price, so the average accumulation price or cost basis of new market participants, which is currently somewhere around $111,000 as we film this, would be a pretty key momentum shift as well. If we can break above that, find some support, then that could really build a foundation for a big move higher.
Yeah, although the short-term holder realized price, as you're showing there in the screen, in this particular cycle, it's been quite a struggle to reclaim. Like I remember in 2021, we barely touch it and then immediately bounce back up, just like we did with the bull market support band. But it's been incrementally less of a support. Sometimes we spend even 1 to 2 months underneath in this particular cycle. So there's still that chance that we remain below it just for a little longer, just because it has become kind of the trend to spend more than a month underneath, as you can see in the screen now.
Yeah, of course. And as much as I'm saying, I think we could be at a critical point, a critical turning point for price action. Ultimately, this cycle, let's be honest, has been pretty boring. Lots of choppy sideways consolidation, a very different market structure than what we've historically seen for Bitcoin. So the fact that we spent some time beneath the short-term holder realized price on multiple occasions this cycle already, and it didn't really have a big macro detriment on price action, it gives me a little bit of reassurance that just because we're beneath it now doesn't necessarily mean that things are definitely in bear market territory. In fact, from this image, you can see from an analysis piece I did a few months ago, actually, we could see that if we are now to replicate any of the periods of choppiness and consolidation that we've already experienced this cycle, then it's probably going to be Q1 or Q2 before we start making new highs. And again, imagine how bad the sentiment would be if we start decreasing to beneath $100,000 before rebounding. I mean, we're only about 15 to 20% beneath the current highs, and judging by social sentiment, you'd think we were at bear market lows. So it's definitely been a different cycle. It's been a very painful cycle for a lot of market participants, and it's really just been chopping a lot of people out, making people frustrated. But I think this is the institutional influence. They're happy to let price be boring, to scale in, reduce those drawdown percentages, and just scoop up some discounted BTC on every dip. But then again, maybe limiting that upside potential as well.
Yeah, absolutely. And one of the things that I do care, but not many people are mentioning this out there, is the timing. So there's been a trend to finish the bull in a certain number of days. I don't recall precisely what's the number, but it's like 1,000 and something days, and then you get like a full year to find the bottom of the bear, and that tends to rinse and repeat with the same numbers. It's very creepy because it's been 2 times in a row that we peak at the precise same day. In 126 all-time high wasn't the exception. When we reached that level wasn't the precise day that it was supposed to happen, if it happens, if it gets confirmed. So now anything that we are doing is in theory in an extended cycle territory in terms of timing. So if we go into 2026 and we get a Q1 bullish with a new all-time high, or Q2, that's going to be the longest cycle ever. And that is the recipe for, putting down the 4-year cycle kind of scenario, which has been playing so far all this time. So that means that you are open for basically putting down the 4-year cycle and saying, well, we might as well get the all-time high in 2026, and maybe we get a 5-year cycle, or maybe not even a cycle. Maybe we just continue. And another thing supporting that, because I want to be devil's advocate, I think at the moment I have too many checkboxes saying bearish. So I am riding a long, but it's a small long that I'm willing to scale up if we go down. So I'm dipping my toe in a long just in case I want to take advantage of a swing. And I'm happy to be wrong. I don't need to be right to make money. But my problem is with all the people that are looking at that and that are calling it, and that is reflecting already in on-chain metrics. I'm already seeing how retail is pulling out, people canceling subscriptions, people stopping to watch the YouTube videos, which is what happens during the dips, during the bull. So it could continue. That's why I'm open to that. But at the same time, if they do it in a sustained way, and if it's very intense that they left the Bitcoin market, then there is not enough for just doing a dead cat bounce. And at that point, there's a point of no return. What do you think about that?
I mean, a lot to unpack there, but we'll start with the 4-year cycle potentially coming to its end, where you started with. And I think historically, the Bitcoin 4-year cycle, the timings of the cycles, I'm not one to fully buy into the seasonality element of Bitcoin or think that we have to peak or bottom after a certain amount of days. I think, as well as the halving event, which has also coincidentally timed very well with the traditional liquidity cycle, this is really where we need to be putting our focus on. Now that Bitcoin's circulating supply is around 95, 96%-ish, I forget the exact figure, of all Bitcoin that will ever exist, we've kind of transitioned into an asset where the existing supply is much more prevalent in the underlying price action. And as well as that, the macroeconomic conditions, we've been so strongly correlated to equity indexes and US tech stocks. If we look at the global M2 money supply, we can see that historically the halving events, such as here in around May 2020, I believe it was, that coincided exactly with the latter stages of the final acceleration and expansion in global M2 liquidity. We can see in April 2024, our most recent halving event. Following that, we saw a massive expansion in global M2 money, and along with that, massive new all-time highs. And currently, we are actually seeing not necessarily a contraction, but a decrease in the rate of M2 expansion. So on a year-on-year basis, it kind of clarifies the rate of acceleration or deceleration in this expansion or contraction. And again, pretty much aligning exactly with Bitcoin's most recent period of choppiness and consolidation. Again, it is aligned with this global M2 year-on-year stalling, just as our previous period of choppiness and consolidation did, just as the one after that also coincided with the M2 money supply. So in previous cycles, it's been a lot more linear. It's been almost a very smooth, non-stop basis of additional fiat being injected into the system. Whereas alongside Bitcoin's more painful, boring, sideways, stepping up in price action we've seen, it's been a very similar tale in liquidity as well. So I think this is one of the key ones we need to be looking towards. And again, another key chart that I'll be watching to, again, give some indication that we may be experiencing a lengthening cycle. And one other factor that I can maybe see, again, playing into this theory is we may be on the cusp of the end of quantitative tightening and federal balance sheet expansion, which we're seeing more and more hints at being just around the corner. And we can see on the 3 previous instances of this happening, it actually coincided with Bitcoin's price massively appreciating. Now, I know the cycle dynamics are a little different. On all 3 of these previous instances, it was in the fairly early stages of the Bitcoin bull market. Right now, we're definitely in the latter stages, but we can see from a macroeconomic perspective, I think things are favoring potentially bullish environments and conditions, potentially throughout the remainder of 2025 and into Q1, maybe even Q2 of 2026, before we see a big peak in the Bitcoin price action. But like I always say, the number one thing that drives not just Bitcoin, but all markets is supply and demand economics. And if we look at the amount of buying and selling on chain, that's where we see the real alpha.
I'm interested in this screen that you're showing now, the whale shadows. So there's been a lot of noise coming from that. I will say not just in the past months, but maybe in the past year, that we've seen loads of awakening of dead wallets, like even 15-year ones distributing, and it gives me the chills, because I constantly have this paranoia that someone is making some big progress on quantum computers, quantitative typing. That's something completely different. But if they manage to get a proof of concept out of there, and they could start, attacking a single wallet, and then see, and that takes months for them, and then suddenly you see this 15-year-old wallet that never moved anything and suddenly sells everything. That kind of it spooks a lot of people, and it gives me creeps as well, because of the pace and the frequency that we are seeing them. What's your take on those whale shadows at the moment?
So, very interesting point on the quantum computing theory. I think we can discuss that a little bit further on, because I'm really curious to hear your takes. But just from a pure supply and demand economics and dynamics perspective, seeing this much selling and distribution by whales, looking at something like the whale shadows chart, instinctively and potentially intuitively feels like a bearish thing. Why are so many old wallets distributing their coins? And like you said, it's been around a year. If we look at this chart of 7 to 9 year whales, we can see the previous instances where we had these big clusters coincided with big major peaks in the Bitcoin price action. But genuinely, since October/November 2024, we've seen an almost constant distribution of Bitcoin by these long-term, large, experienced holders. So again, there's two sides to this. Is this a bearish thing because lots of people are selling their coins? Or does it really undermine Bitcoin's strength that we've seen the price go from around $60,000 to over $120,000 in spite of all this selling? Now, this is just looking at the 7 to 9 year whales. I've actually collated all of them here and averaged it out over a 28-day period. So what we can see, this red line shows the total amount of whale selling. And again, we can see some very similar trends of this peaking towards market cycle tops. But throughout this entire cycle, it's been on a very steady trend to the upside, surpassing even today most of the days we had during the previous Bitcoin bull market. So this is a huge amount of Bitcoin hitting the open market. And who's accumulating it? Well, of course, the institutions are accumulating to some extent. We can see the number of wallets actually holding a huge amount of Bitcoin has been rapidly decreasing, alongside the amount holding a medium size. 100 Bitcoin is obviously a lot of money, but these medium sized wallets really starting to accumulate as well. And this is primarily through Bitcoin treasury companies and ETFs, etc. But the fact that we've seen this much selling and are only 15 to 20% off the highs really gives me some bullish outlook that the market really can sustain this amount of selling. I mean, if you looked at any of the previous cycles, one individual or a small group of individuals, if they tried to move 100, 1,000, 10,000 Bitcoin, we'd really see that move happening on the market. We'd see price rapidly decrease, a huge amount of slippage. And this is why in the previous cycles, we didn't really see a huge amount of whale activity until the market had really got to these peaks to allow retail FOMO to come in to actually find some liquidity to offload those coins. Whereas now we almost have a constant stream of institutional capital coming into the market. So those people that bought Bitcoin at $5, $10, $100 a decade ago, who are now been holding for Bitcoin to reach over $100,000, they now have a very stable source of liquidity that they can offload to. I mean, we could see countless examples of whales dumping billions of dollars on the open market. And we've only seen price moved a few $100 or so, less than 1%. It really undermines the growth and maturity in the asset. So I think it's one of those where is it bearish that lots of people are selling, or is it bullish that we have seen all of this selling, all of this redistribution from a few centralized, huge OG whales to a much more distributed holdings of Bitcoin throughout these ETFs, throughout these treasury companies? And I'd just like to quickly reference before you jump in that there was a great article by Jordi Visser discussing whether this could be Bitcoin's IPO moment, where all of these early whales who took on the risk are now reaping the rewards, cashing out, buying new houses and Lamborghinis, etc. And it's distributing all of these old coins to the new market participants.
Yeah. Actually, I like your the optimistic view, which is basically, all these coins are hitting the market, and we have resilience enough to sustain it. That's really a positive take. But there's also the neutral one. I want to hear your opinion on that one. What if these coins are moving wallets just because they want to migrate to a new gen wallet, quantum resistant one, or they want just simply something that works better, right? Because 15 years old in a wallet, can you imagine how it looks, that pen drive or whatever is holding that coin? It must be really, scary to have thousands of Bitcoin in a wallet 15-year-old. If I knew that I have that pen drive, I would be going nuts to move it into a new one, at least myself. That is one option. The other option is that they realize that they have too much and they spread it across multiple wallets. So there's some siren sounding. Anyways, I thought it was here. Anyways, so that's one option, neutral, because it could be that they just want to move it to another wallet and there's not really distribution going on. They are just migrating, upgrading, whatever. Second option is they are slicing the holding into smaller chunks, into multiple wallets, because having literally 7,000 Bitcoin in a single pen drive is just nuts. And it also depends where you're putting really your secret keys, because that's what matters really. The pen drive can burn. But then there's the option that sometimes they put it in the exchange and then they put it back because they don't sell it. So I think we have to contrast the whale shadows with how much is being held in the exchanges and how much has really hit the market and move into short-term holders, being part of a natural distribution from strong hands into weak hands into short-term holders or whatever, because those are the ones that are paper hands. And eventually the chain of events is you hold a coin as a whale, you hold it for 15 years, you put it in the exchange, you have to distribute it, it has to go to a short-term holder. That dude suddenly enters into negative because the market is retracing, then he panic sells. And at that point, you enter bear market because it's just too much and it hits the market and no one wants it. And then the price comes down. But if something just moves and it goes back to the whale, to the same owner in a different shape, then we are resilient too, I guess. So we need to look into how much is in the exchange, I think.
Of course, and that is a very valid point. It's one of the kind of nuanced topics of on-chain data, in that just because we're seeing Bitcoin moving doesn't necessarily mean it's 100% being sold or bought, but some more in-depth analysis where they've done full on-chain filtering by James Check and the Glassnode team reckon there's only around a 5% discrepancy between the amount of actual Bitcoin we're seeing, between Bitcoin just being split into more wallets, Bitcoin being, self-transferred to a different existing wallet. And there's also the argument, of course, that Bitcoin, a lot of these long-term holders have been converting their Bitcoin into ETF holdings. But what we can see is the ETF cumulative flows, once we actually exclude the conversion from GBTC into these ETFs, is somewhere around 750,000. And from treasury companies, again, about 1,050,000. But you have to keep in mind, MicroStrategy had a couple 100,000 there as well. But throughout this cycle, even though when you look at the long and short-term holder chart, you can see there's been 3 distinct peaks, it doesn't really look like there's been that much distribution from the long-term holders. If you actually look at the cumulative amount of Bitcoin being transferred, we've actually surpassed 8 million Bitcoin transferred from long-term holders to new market participants this cycle, which has far exceeded any of the previous cycles. And like I said, there are little asterisks we need to put there. There will, of course, been a few percentage of Bitcoin transferred, converted into ETFs, although no more than around 10%. There's also those wallets that may just be splitting them because you don't want to hold a huge amount. But again, maybe 5% of this can be negligible. Either way, we've seen millions and millions of Bitcoin transferred from long-term holders to new market participants. Although one thing, again, we need to take into consideration here is the market dynamics have changed. If you look at the previous Bitcoin cycles, we were a peer-to-peer electronic currency. People were more than happy to move Bitcoin around. It was a lot more retail driven. Whereas now there's much more of a narrative of it being a store of value. So we're actually seeing the percentage of long-term holders in terms of the overall circulating supply massively increase. So if we look at the total percentage of long-term holder Bitcoin when standardized to the circulating supply of Bitcoin, then looking at the percentage transferred. I know that sounds confusing, but essentially what percent of all Bitcoin held by long-term holders has been transferred. We're actually right in the upper range of where we usually see the latter stages of a Bitcoin bull cycle. Now, if you look to 2017, just because we're at a similar rate to where we were just before the peak, the Bitcoin price actually doubled from that point in time before we actually topped out. So just because we're near the end stages of the cycle doesn't mean that we've already topped out. And just because we've seen all of these Bitcoin transfer, again, doesn't necessarily mean that I believe we've topped. And there are little nuances here and there, but that's why we need to look for confluence. Because of course, looking at the supply and demand economics of the on-chain data is definitely one element of that. I actually think the addition of the ETFs has been a way to actually clarify the data as well. And what we can do is if we look at the average 28-day flows from the ETFs, we can look to the monthly average inflows or outflows. We can see when it's a majority outflow, that usually coincides with market bottoms. And alongside that, if we look at derivatives data, funding data, all of this, we can actually get a really good understanding from multiple different sources. And again, if you look to the previous cycles before the ETFs, before the treasury companies, a lot of this on-chain data still worked exceptionally well. And a vast majority of Bitcoin was still just being sent to centralized exchanges where they're being traded as paper Bitcoin on these centralized custodians, just collating wallets, etc. So of course, there's little nuances, but we don't need to know 100% of what every single wallet is doing. If we can gain a very decent estimation of what ETF holders are doing, what long-term holders are doing, what the derivatives market are doing, and collate all of them together, and they're all kind of pointing towards one side or the other, then that really gives us some idea that that is the most probable outcome.
Yeah, that's very interesting. And guys, I remind you in the comments that you can drop your questions to Matt. We are going to try to cover all your questions. And since we are now halfway through the video, feel free to start dropping your questions. It can be on-chain, macro, Bitcoin, TA, levels, MAs, anything that you want. I actually want to show you a chart in here. I'm not supposed to show my charts today, but well, I'm going to break a little bit the rules. And because I want to hear your opinion on this one. Let me go into ratios. Yes, I have tons of tabs, but now I'm organizing them in groups, at the very least. So first of all, I want to show you this one. This one is a ratio chart of Bitcoin against gold. And what I'm doing in here is I'm using logarithmic scale to have the Bitcoin price on the top and to have as the big emphasis on what's going on with the momentum of Bitcoin against gold. And I'm tracking 2014 breakdown below this trend line. You know, I have this bad habit of putting trend lines on the RSI, but it works pretty well for me. And in here, have one, you break down, and let me zoom in. I don't know if you can see there is an inflection point right after pinching the support to try to reclaim in 2014, and then you come back down. And that coincides, 2 months after the all-time high. And then in here in 2018, early, you get a breakdown, and you also have some sort of inflection there, trying to go for what I call revenge rally, when you try to hit the trend line that you just lost. That happens around there. And then in here, let me zoom in this fully. In here, 2021, which is very interesting, you lose it. And for the first time, instead of just going straight into a bear market, you go back up and you fully complete the revenge rally. Lost support, hit of a previous support as resistance, and then bear market. That inflection there brought 69K. So where are we here? That's why I'm so interested, because this lost the support against gold, lost it. We already complete the revenge rally in July 2025, and we are coming down with a new low of the momentum. So technically, from the point of view of momentum, maybe not from the point of view of price, from the point of view of momentum, and based on past performance, we are here. We are in January 2022, relative to there, which is the point where we will have already corrected to 30K. So what I'm taking from this is not just, okay, we are in a bear market, there's a confirmation. I'm also taking that if we were in a bear market, we are well ahead, deep in the bear market. So what are we doing at over 100K? At this point, the last cycle, we were at 30K, aiming for 48K move up. That's this move there is the move from 28 to 48, and then the rest of the bear market. So this says that we are halfway through inside a bear market, timing things like with gold. And I also have the ratios, not the ratios, the top bottom model. Let me see if I can find it. Top. Which one is? I think is potentially this. No. My model about the volatility top bottom is this one. Yeah, amazing. So this shows the volatility of Bitcoin constraining year by year from the early stages, where we had the maximum volatility in 2011, then less volatility, and every cycle we get a breakout, we enter in a bull market. So if you look at this, where are we? We are about to hit the bottom line, as if we were already halfway through in the bear market as well, in terms of the volatility to the downside. But we are still above 100K. So what my takeaway from this is that we might be already experiencing part of the bear market, but that bear market potentially is going to be a disappointing one, because according to these two charts, against gold, there's just halfway through back down left. And according to top bottom, there's just a move to 80K. That's it. What if somehow we just go as deep as that and we start a new cycle, a new different cycle, an institutional cycle? And I'm open to that, just for discussion. I mean, I don't know where the price is going to go. I don't know if these models are still valid or expired. Maybe I need to ditch both. But it's interesting to think that maybe what's coming next for Bitcoin is something that no one has any idea that is about to happen.
100%. And there is the argument, if you look at the Bitcoin versus gold chart, for rather than just a pure USD valuation, which is measuring against a fiat currency constantly debasing, if you measure it versus something like gold to measure its respective purchasing power, we peaked in late 2024. So have we been in a year-long bear market already? At which point are we only going to see a 30, 40% maximum drawdown, and at that point build a base to move higher? If that is the case, then that would be, again, pretty exceptional and very different to what we've seen historically in the Bitcoin bull markets. But it wouldn't be out of the realm of possibility, given the fact that the price action so far this cycle has been these step ups in price action, where we've seen big explosive move, choppy consolidation and sideways. Whereas if you measure during those choppy and consolidationary phases, Bitcoin versus gold versus the S&P 500, it's almost been a cycle of 2 or 3 mini bear markets, followed by a couple of weeks or months of explosive moves to the upside, followed by mini bear markets. So potentially this is playing into the narrative of, I don't want to say Bitcoin super cycle, but definitely breaking the trend of this 4-year cycle and becoming, again, its own asset that isn't necessarily tied to just being a high beta play of US equities.
Yeah.
It isn't necessarily tied as just an inflationary head against liquidity. And at that point, maybe Bitcoin can sustain this much more positive and healthy price action where we just kind of step up, because it's incredibly boring and brutal for retail participants to see just infuriatingly sideways price action. But for institutional investors to be able to allocate into an asset which barely has drawdowns greater than 20, 30, 40%, but has still the upside potential of 100% in a fairly short space of time, then that's the ultimate asset for these institutional investors.
Yeah, I agree. So we don't know what sort of bear market we're going to have, but what sort of market bottom you have in mind? Have you given any thoughts to potential bear market bottom? Now, I'm not assuming that we are already in the bear market or anything, but if we get a bear market, what would you say are good candidates numbers?
So the chart I'm sharing at the minute is a good indication of potentially where I could see Bitcoin finding some support. Now, I definitely can't take credit for creating something like this. The indicator you're seeing is something that I've kind of muddled, I can't think of the word, together using many different data sources that are already available. So what this is the electrical cost to mine 1 Bitcoin. And as we can see, historically, it's acted as an amazing floor for supporting the Bitcoin price action, almost think of it as Bitcoin's MNAV. As you see with treasuries like MSTR, if their NAV, their net asset value premium, dips beneath 1, you can essentially buy $1 worth of Bitcoin for 80 cents, 70 cents or something. If you can buy Bitcoin for less than it costs to electrically mine 1 Bitcoin, then again, that's a pretty good deal. And every time Bitcoin has come down to this level, it's not a static level, of course. As the miner difficulty decreases, as hash rate diminishes, this is going to go to the downside.
Is that the
But
global
as we can see,
average?
this is the so this is looking at region specifically and then weighted per mining output. So looking at the share of the US hash rate, which is about 37%, and the average electrical price for those miners, then looking at the rest of the world that we can kind of average that out, looking at miner efficiency, looking at block subsidy. We can add all of these together to get a rough approximation. It's not going to be an exact production cost and it's going to differ per entity. But if we look at the global average, it's somewhere around $70,000, but trending to the upside. And again, I think that aligns quite nicely with the technical level of the previous all-time high around $69,000, where we had a long period of chopping and consolidation in this cycle already, again, around $50,000, $60,000, $70,000. So I think right around there, around that $75,000 level, again, where we bounced in our most recent move, around there, I think you'd be able to accumulate some very good risk-to-reward discounted BTC. But as I said, for now, that's not currently my base case. My base case is still Bitcoin to move higher. I still think that the macroeconomic environment is there. I still think the overall fundamentals and bullishness surrounding the market leads me to believe that the most probable outcome is to the upside. But as I said, that's the most probable outcome. I still think there's a 25, 30% chance we've already topped out this cycle. My job isn't to work in definites, but it's to work in probabilities and percentages. And as you alluded to earlier, you can be wrong a majority of the time and still make money, and you can be right a majority of the time and still lose money. It all depends on how you're positioning yourself and making sure you're ready and prepared to benefit from any scenario.
Yeah, absolutely. And don't get me wrong, because some people think that talking about breaking the 4-year cycle is a synonym of being bullish. Personally, I'm looking at a potential for eventually breaking the 4-year cycle, but I'm completely open when it comes to the direction. I'm just basically trying to be as objective as possible in looking at other asset classes that were doing cycles, because Bitcoin is not the only asset that has done a cycle 4 times in a row. Even the S&P, the Nasdaq, you could look back in time, and some commodities and different asset classes have done that, and for years, and repeating the cycle. And every time they do a cycle again, people get used, they get spoiled with the outcome, the expectation, like now bear market, now bull market, now bear market. And at some point, some damn money put a lot of cash on that expectation, and they set a huge liquidation level to the upside, and they trigger a massive short squeeze that completely breaks the cycle in the opposite direction that was expected. And that has happened. Just look back in time, remove the dust from the books, and check, 1930s, check different assets that have done that, and see how it breaks the cycle. How painful it is when the S&P was supposed to enter another downtrend, another cycle down, and it didn't. It just fake out with a fake move, very shallow to the downside, just enough to convince everybody this is the bear market. And you get all these late shorts, massive positions, and even institutions and funds entering in that direction. And suddenly we go to the opposite side, and you find a new level in the ladder to the upside that no one was expecting. And I'm not necessarily bullish. I don't know if that's going to be the outcome. It could be the opposite. It could be that, there is a massive hack or something that affects Binance, and we were supposed to bottom at, I don't know, 40K, 50K, and we end up bottoming at 10K. And that is also something that no one was expecting. And everybody wants to front run 50K, and then everybody gets screwed to the opposite. I'm just open for new possibilities to break the 4-year cycle without necessarily being attached and obsessed with the idea. No, it has to be to the upside, because that is silly in my humble opinion.
100%. And I think we've seen that just lately, with a lot of people very much expecting as if it was almost a certainty to have a very positive October and a very positive November, just because historically that has been the case. When in investing in markets, has a vast majority of participants ever gotten something exactly right? It almost never happens. We almost always see markets punish the most participants at once. And I think the same is going to be true this cycle. I think a lot of people called for the Bitcoin bear cycle like they have done every single time we've set a new all-time high. And I do think that now the maximum pain scenario for a lot of participants is, especially after the big liquidation we got last month, is to potentially break beneath $100,000, have a lot of people shorting coming in, a lot of people selling, thinking that the cycle was over. We peaked, and then Bitcoin can rebound and punish the most participants at once before moving back to the upside. And again, this could all be wrong as well. All we're doing is working based on probabilities. But as you can see from this image, even in this cycle where people have said, we've not had this big move, institutions are manipulating and suppressing the Bitcoin price action, we've not got the retail FOMO. We can see already on 5 separate instances this cycle, we've seen Bitcoin have rapid price ascensions. And this is over 65% in under 100 days. So if we could replicate any one of these from the prices we're currently at today, Bitcoin would be at least $160,000, if not closer to $200,000 within just a 3-month period. So again, I'm not necessarily saying that is definitely going to happen, but all on-chain data is showing us, all derivative data, all macroeconomic data, is just the mass psychology of investors. And the emotions that we all feel is as cyclical as price action. We'll all feel greedy, we'll all feel fearful. And at that point, historically, we can see acting as a contrarian has usually been the best way to go.
Yeah. So basically the way I approach that, because people say, well, then you have one leg in being bullish, one leg in being bearish. So you're literally not doing any analysis. You're not worth, even listening to, because you're contradicting yourself every 5 minutes. In a way, yes, I give you that. But in another way, there's a lot under going on. There's under the hood. Basically, I took a short. The last short was at 126K, and I averaged it to 122, and it's now protected with a stop loss at 120 point something. So if I'm wrong on the short and we do something that is not according to the past performance, that is less likely, in my humble opinion, to happen, I take a small profit. I don't get hit. I don't get completely wrecked like people want to believe is going to happen to me because I took a short and I deserve that, right? Then I have my short there. If it goes wrong, it doesn't really go wrong. I still take a small profit. And with the long, it's the same. You're taking a long. And what if we enter the bear market? Well, I guess it all comes down to the size of your position. What is your plan if things go wrong? If you can keep all of these things in the back of your head and come up with an actual plan, and the plan is not just covering the good path, the happy path. You need to cover the worst side of things and think, what if I'm wrong? What am I going to do? How am I going to manage this position? What if I don't put the stop loss and I wake up tomorrow with 20K down on Bitcoin? What will be my next move? And that is the first step in every single position before I place it. So once you get to that discipline, after that, you really don't have to be that right. You just take along on a fair, good opportunity. And if it doesn't play out, you still have some additional bullets in your pocket to do something else. Don't know if you wanted to say something, but we can go into the questions after you say that something, if that's
yeah,
the case.
Sure. So I used to trade a lot more actively in the market. I'm a lot more passive now and have a lot more automation going on. So I'm personally not too involved with trading as I used to be. But one thing that I always tried to instill was a lot of people, especially when starting out in their trading, and I was definitely the same, was they spend 99% of the time focusing on perfecting the entries and the exits of their positions, when realistically you need to be able to use a strategy which is essentially a coin flip, knowing that you're going to be wrong half of the time and still having a strategy that can make some profit by managing your risk, managing your size, managing your psychology within that trade, and just removing emotions and bias. I'm of course very bullish and long-term Bitcoin. And I do think my base case is to the upside. But if it moves to the downside, I'm not leveraged long, overexposed. I have plans and scenarios played out in my mind to take advantage of any single scenario. And as I said, as much as I love Bitcoin, I have to be prepared that I might be wrong. The market may humble me and move to the downside, but at which point I'm going to see that as an opportunity. You need to see every trade as a win-win scenario. And of course, that's very, very difficult when you know you're in an industry where a lot of the time you actually lose trades. But if you can try and find a strategy to minimize that downside risk, minimize the massive swings and volatility you have in your own portfolio, and again, win on a 50-50 coin flip strategy, then you're going to massively outperform a vast majority over a longer time frame.
Yep. Yeah, fair enough. We can go with the first question, actually. And the first one, feel free to see it in the screen. It's curious what you think is going to happen for Ethereum. I know you're not into analyzing Ethereum, but in general, what you think about the altcoins situation. We have an elephant in the room this cycle, which is altcoins never doing anything really good. I guess it's connected to the liquidity, but the question, the $1 million question is, what needs to happen for Ethereum and all his friends to do something this cycle before we close the chapter?
Yeah, sure. So I work for Bitcoin Magazine and Bitcoin Magazine Pro, so people assume I'm a Bitcoin maxi, but that isn't the case. I actually think altcoins can provide a lot of tech and innovation that one day will be absorbed and consumed and evolved into Bitcoin to make Bitcoin the ultimate chain. But during the meantime, because this evolutionary process takes a long time, if there's altcoins and technologies that can provide something that Bitcoin can't, then I think that's a good thing for the space in general. I'm a full believer in free market capitalism if people want to do that. But ultimately, I don't think any of them are going to outperform Bitcoin over a longer time frame horizon. None have so far. If you look at the ETH BTC chart, it's not a very pretty sight. But there are, of course, periods of time when you can make a lot of outsized returns compared to Bitcoin. When you get these alt seasons, when dominance is falling and the BTC charts moving to the upside, that's the ratio charts, ETH, Solana, Cardano, whatever your favorite altcoin is. But usually they occur after Bitcoin has already had a big liquidity injection. Usually we see capital trickle down. It goes from stable coins into Bitcoin, into large market cap Ethereum, Solana, and then from there it trickles down into lower market cap, more volatile, more speculative assets. So anyone who wants altcoins to do exceptionally well really should be betting on Bitcoin doing exceptionally well as well, because without Bitcoin having this big rise to the upside, there's just not the capital within the markets to really trickle down into these assets. Although one thing I will say is I think a lot of people have, again, been very negatively impacted this cycle, specifically compared to last cycles from an altcoin perspective, because we really haven't seen any sustained period of outperformance from these altcoins. But I maybe don't think we're going to ever see like a true alt season again. The institutions are here. This isn't so much a retail-driven industry anymore. And as we can see from these institutional participants, they really don't care about these altcoins as much. There may be some dabbling in Ethereum and Solana and XRP potentially, but they're not really looking at 100 million market cap new launch coins. They're looking to allocate to Bitcoin, looking to rotate into Bitcoin. And that's ultimately going to lead to Bitcoin outperforming a vast, vast majority over a very long period of time.
Yeah, I agree. We got the next question from Safir. Says, with institutions accumulating more Bitcoin, are we entering a period where large whales can more easily manipulate the market, as some suggest happened around the October the 10th?
So within the altcoin space, I think that is true. There's lots of centralized holding coins where there's a huge percentage owned by a few entities. But I actually think with Bitcoin, these whales accumulating, these new whales, the new institutional accumulators, they don't have the capacity. I'm actually sharing a chart right now, just in case we can quickly show that on screen. I think this distribution from old whales, these people that bought Bitcoin for a fraction of $1 a few years ago and accumulated tens, hundreds, thousands of Bitcoin for very, very small amounts of capital. We've actually seen throughout this entire cycle, the number of those extremely large whales decrease massively. Now, if you're looking at an asset where 50 people control 50% of the circulating supply, then you only need a very small percentage of them to start dumping simultaneously to really have a huge influence on the market. Whereas if 50% of the supply is now controlled by 5,000 separate entities, then it massively reduces the impact of that. And Bitcoin's now a multi-trillion-dollar asset. We can look to Michael Saylor and Strategy, who have been accumulating as aggressively as anyone in the world. And still, they only hold, I say only hold a few percent of the Bitcoin supply. These ETF holders, as much as they are buying a fraction of the circulating supply of Bitcoin. As we could see on the ETF chart, about 750,000 net flows. Excluding MSTR, there's only about 300,000 to 400,000 Bitcoin accumulated by the treasury companies. It's still very much an asset controlled and driven by everyday investors. Now, those everyday investors have probably got a little bit deeper pockets than they used to. But if we look at something like the addresses with 100 BTC, we can see this has been absolutely skyrocketing alongside the the addresses holding 10,000 BTC absolutely plummeting. So I actually think Bitcoin is becoming more distributed and more decentralized than ever before, which is maybe painful in the short term, seeing all of this selling. But in the long term, I actually think it's a very, very bullish fundamental factor for the supply and demand economics of Bitcoin.
So personally, as a swing trader, looking every day at the order book for the past, couple of years, at least in that every day, I noticed that there's a lot of manipulation, but it comes down to a different type of manipulation. It's not manipulation like selling Bitcoin. It's more like derivatives, futures, that they're doing swapping, or they literally take the price where they want to trigger the algos. And we've seen also some other type of manipulation in the past weeks. I don't know if you are aware that Binance, with this other institution that was a market maker, were moving Bitcoin like crazy and selling. And there's still some selling going on Binance thanks to that. So that qualifies in a way to manipulation as well, but obviously in a different scale.
Of course, but the thing is, all markets are susceptible to manipulation. No one really cares about manipulation when it's to the upside. If we see institutions offloading Bitcoin, but it's just within a centralized custodian and it's paper BTC during massive bull market rallies, and we see price massively accelerating to the upside, no one really cares about that manipulation. It's just one of those things. It's always going to happen. It's game theory in play. If someone can control the market by selling a huge amount of spot BTC while shorting on futures to gain that profit, buying back, then, I mean, this happens in every industry. It's just part of the game. And people say it's unfair, but realistically, now that we're competing against Wall Street, they're going to use all the tools at their disposal to really make as much profit as they possibly can. So it's the unfortunate reality, not just of Bitcoin, but of all markets. And as we transition from this almost toddler asset, this retail-driven small market cap industry, into this huge $1 trillion market, where now, like I said, Wall Street, pension funds, nation states are accumulating Bitcoin, they're going to use every tool in their arsenal to make sure that they can accumulate as much as they can at as low a price as possible.
True. There's this question that is very interesting. Thoughts on the probability of there being a blow-off top at the end of this cycle?
Like I showed with the chart previously, the 5 separate instances we've already had this cycle of big exponential moves. I'm one of the few people that I'm aware of that really do believe that we are going to see a big blow-off top end this cycle. I think that's just the natural progression of cycles. Of course, we could just have a rollover top, a more longer distribution phase like we kind of had in the previous cycle. But it doesn't matter if we're looking at the S&P 500 or gold. There's always periods of irrational price action. And gold, which is almost exclusively an institutional-driven asset, if you look at the gold chart, it's just gone exponential before a big blow-off peak. We're probably going to see a multi-month consolidation surrounding that. So my probability of Bitcoin ending this cycle with a big blow-off peak is over 50%, which I know might seem optimistic. But if we look at the price action correlation between gold and a lagged gold and Bitcoin, we can see it's an incredibly strong correlation. Now, I don't think we'll follow this path down to a T, but just a small rotation from markets like gold, which have had over a $10 trillion increase in a very short space of time. And given the fact Bitcoin's money multiplier is somewhere around 3 to 4, so every $1 going into Bitcoin increases the market cap by about $3 or $4. If we just see a small rotation from these existing other comparable assets into Bitcoin, then we definitely do have the firepower to have this big blow-off top.
Cool. And the last question before we finish the stream today, we still have 5 minutes, is what you think about following CBBI. I don't know if you are aware of that indicator, Matt. Do you know it?
Is that the Colin Talks Crypto, like everything indicator?
I think so. Yeah, it's like a website. If you can Google
Oh
it,
yeah.
it's just CBBI, and it shows kind of a collection of different. Probably you know it because you build your own, right?
Yeah, the Colin Talks Crypto Bitcoin Bull Run Index. So shameless shill. When I looked at this one, I did definitely take some inspiration from it. However, all of these metrics that are making up this index are on-chain data points. That's not necessarily a bad thing. There's a few technical ones in there as well, I guess, but I don't think it's as bulletproof necessarily as something like this one, which I created, which of course I'm going to say is the best, but I tried to incorporate multiple different factors. So macroeconomic factors such as the global M2 money supply, on-chain factors, so we're looking at actual network utilization, minor factors as well. I tried to create everything and make it in a less overfitted way. And this is just one iteration of it, but more recently I've actually redefined this metric so it's on a more 2-year rolling basis to try and incorporate everything. The thing is, all of these models, this one included, they're going to break at some point. The pi cycle top isn't going to cross at some point. And this is just the reality of markets. We try and use these tools to clarify what could happen and what could play out. And when we see some confluence across many of them, once we start to see lots of them start to point towards one potential outcome, then it increases the probability of that being the case. However, there's only one thing that dictates price action within not just Bitcoin, but all markets. And it's supply and demand economics. It doesn't matter if we see global M2 money supply rapidly printing to the upside. If there's a huge amount of selling and no one buying, that's going to top out the Bitcoin price action. All of the data points we look towards provide some clarification. And when we put them together, almost like a jigsaw to paint a picture of what the future could bring, then again, it gives us some clarification. But it doesn't matter if price is at 250K or 150K or whatever it may be. If certain indicators are crossing certain levels and data points and charts are pointing towards a bullish divergence or whatever, realistically, if no one is buying and everyone is selling, price is going to go down. That's the number one controlling factor in the price action. So as much as we like all of these charts and they can provide some simplicity and clarification, to me, they're just temporary tools that help clarify a irrational asset such as Bitcoin. And when we focus on the underlying data, the underlying supply and demand economics, that's where the real alpha is in my mind.
Yeah, it's interesting that in your own version of the indicator, even though you cherry pick better indicators than the CBBI, you took inspiration in that, but you supposedly made it better, but it's still kind of humbly going sideways within the mid range around there. It hasn't gone to green, neither to pink. It's just stuck in the middle. Of course, we are at a local low at the moment, but it's not clearly yet breaking down out of that symmetrical triangle where it is.
Yeah, true. And as I said, this is the thing. As much as we can look towards metrics that definitely have a causation effect on the Bitcoin price action, such as the global M2 money supply, such as the profitability of Bitcoin miners, the profit taking that we see on chain, realistically, there's only one thing that's ever going to influence the Bitcoin price action. The moving average we see on the chart, again, can provide some confluence, give us some areas that we can look towards in the short term for a bounce. And as I said, I have actually redefined this indicator to some extent. I don't know if I can find it very quickly, to work on a more rolling basis. So rather than looking at it over Bitcoin's entire history, it's evolving to Bitcoin's evolving supply and demand economics. I have found it very quickly here. Which is on a 2-year rolling basis, and at which point the everything indicator has actually worked fairly nicely throughout the history of Bitcoin. These are all great, but realistically, as I said, you need to look for who's selling, you need to look for who's buying, you need to look for incredibly high funding rates, overwhelming fear or greed in the market. And once we piece all of those together, it doesn't matter what the rest of the markets are doing, especially if we're still discussing the possibility of Bitcoin decoupling from traditional finance and traditional assets. We'll still likely have an influence by global M2 and liquidity, and we'll still likely have periods of strong or weak correlation to other assets. But if we do want Bitcoin to become its own unique asset, independent of all of the markets, then we need to evolve our understanding of how to actually analyze a market and analyze an asset and its price action. And the fact that Bitcoin allows us to monitor the underlying supply and demand economics on chain in real time of every single market participant is something we've never been able to do before. So for me, leveraging that data, leveraging the actual buying and selling of Bitcoin is what I'm going to look towards. It's always better to react than to predict in the market. And just as my models will break, everyone else's models will break. But the concept of supply and demand is going to be true forever, not just in Bitcoin, but in all markets.
Yeah, and since we have run out of time, but since I'm the host, I'm gonna ask you one question because I'm spoiled one here. I want to know ideally, if you can answer with one word or one phrase maximum, how does a potential recession affect Bitcoin? Hypothetically, imagine there's an AI bubble or there's anything going on large enough, like large proportion. We're talking about like recession, massive 2000 or 1930 size. How does that affect directly Bitcoin in the short term and then medium and long? So do you see initially, blow off top or crash to 10K and then a recovery massive because it's a store of value? And how well, it's no longer going to be a phrase, but I'll let you go.
I was going to say, that's very hard to answer with one word or phrase. I think
no, you can answer no.
Badly. I think
Badly.
Bitcoin is still very correlated to US equities. As much as we can point towards a potential decoupling and rotation from other markets, realistically, if we see a great Wall Street crash of the 2020s and we see a 50% drawdown across the market, Bitcoin is going to be going down quite a bit further than that, unfortunately.
Yeah.
Although long term, it's strong. It's still an independent asset. It's still nothing like we've ever had access to before. You can still send billions of dollars by memorizing just a few words in your head. Anyone in the world, anonymously, without any permission, for practically free. And that's a technology that we've never had before. It's commoditizing energy itself. And of course, I'm incredibly bullish long term. If you're watching this, you're incredibly bullish long term. But let's be realistic. If everything else has a big, great global financial recession, it's going to be a tough few years.
Yeah, I agree. Okay, let's leave it on a good note. Well, Matt thinks that there's just a 20% to 30%, I think you said, of potential bear market incoming. So you still have the door open. And thanks, guys, for watching this stream. And I'm going to invite Matt in about a month, or hopefully I can have you. Remember that I didn't mention this. You're going to be presenting tomorrow in Bitcoin Amsterdam, and many of the things that you covered today are going to be there. So consider yourself, guys, spoiled, because he disclosed a lot of things that he was only going to present tomorrow, along with Benjamin Cowen and other people exposing in Bitcoin Amsterdam. Is that true?
Yeah, that's true. So tomorrow, which is Thursday, the 13th of November, 2:30 local time, 1:30 UK time, depends on where you are in the US for US time. But I'll be presenting on stage with Ben Cohen, Rational Root, and Andre Djorogic from Bitwise to discuss the institutional influence and Bitcoin's evolving market structure. So as you said, I discussed a lot of the things here today that we'll actually be covering on stage tomorrow, but we do have some great insights and some other great minds on stage as well. So tune in if you can, it'd be much appreciated.
Cheers. Thanks for coming to the show, and I hope to have you soon. And enjoy the presentation tomorrow. I'll see you in the next one.
Thank you very much. Always a pleasure.
Cheers. Bye-bye.